Good evening, friends. The first day of the month has started on a very positive note. Today, we have seen a rally across the market, but that was not the case with the month of August. So I've come with the equity outlook with some indication. Should we expect the rally to be there? And if yes, how much? So I'm going to discuss all this. But before I begin my webinar, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. This is only for education purpose. Past performance is no indicator of future returns, and investment in securities are subject to market risk. Now, if you look at it, the market, the Trump tariff tantrum that we call about 3T, there are various, what we call dates or milestone that you can look at it. First, the 2nd April announcement, then the 9th April, from 2nd to 9th April, market went down by 4%. Then there was a announcement that there is a 90 days, what we call deferment of a tariff. The market from there, from 9th April till 2nd July went up by 13.6. Then on 6th August, he announced additional 25% tariff on India. And from the 6th August till 26th August, the day on implementation, actually market went up. If you look at it, this market actually went up by 0.6. And from 26th August till 1st September, the market went down by 0.35%. So overall, if you look at it, while the market is concerned about, but it's not reflecting so much in the Nifty 50 numbers. Now, let's go with what happened with the month of August. There was a selling pressure across the board, whether we like it or not. Why? Because Trump made a statement on 6th August and came into force on 26th August is that India will have to pay 25% additional tariff. And the reason why for the additional 25% tariff, because the pretext was that India imports crude and defense from Russia, and by doing that, it is giving money to buy weapons to Russia. And that's the lame excuse or the reason given by Trump to impose that. The market breadth in the month of August was very poor. In fact, there was a selling pressure across the board. It was not that only the small and mid cap came under pressure, even to some extent large cap came under pressure. And various indices also came under the pressure. And when the breadth is negative, the biggest bunch taken by the mid and small cap. And that's what happened in the month of August. FPI, still that love story has not started with the Indian market. They have been a net seller, and this is despite overall India Inc. numbers has been quite good. Now, poor sentiment, poor advance decline ratio, and so on and so forth had its impact on the cash turnover on the NSE. The volume, the average cash daily volume, basically turnover, went below 1 lakh crore, second month in a row. In fact, only on 4 occasions, the cash volume on NSE was above 1 lakh crore, which if you go back when the sentiment was good, almost every day we had seen. So what does this clearly indicate? That subdued sentiment on the market from the retail investors. They are not putting in more money. The activity is little low. And in the low activity, the market has taken a beating. When tariff came in, I think Modi did a very smart thing. On 15th August, he announced that we will have a GST rationalization. We will only have 2 rate, 5 and 18. In other words, 12 and 28 will go away. And of course, there will be a 40% that would be the syntax kind of a luxury kind of a stuff, which would be there. So that's what has basically happened. On the that's on the market side. On the economy side, India's inflation remained very, very muted. 1.55% in July. This is the lowest since June 2017. 2017 के बाद ये सबसे lowest level है 1.55%. But the core inflation was quite sticky at 4.1%. RBI in its August monetary policy loud and clear said that inflation can go up in the last quarter of FY 2026, and hence they did not do any rate cuts, which was not expected. Also, they did not do that. Now, these numbers may undergo change. Why? Because the RBI was expecting the inflation to go up in the fourth quarter, but that was before Modi made a statement about the GST rate cut. For some reason, GST cut happens, and I'll come to that in the later part of my presentation. Then inflation can remain benign even in the last quarter of FY 2026. And if that is so, then there is it opens up the probability of a rate cut. That's what can happen. Net direct tax net collection has been little down. It was down by 3.95% as of 11th August. The data has not been updated from there. So what is latest data available is till 11th August. And the reason for this, purely because of the budget has announced no income tax to be paid if your income is less than 12 lakhs. And due to that, this has happened. Strong growth. Some gentleman sitting outside India made a statement that India is a dead economy. But the first quarter of this financial year, India grew at 7.8%. Dead economy does not grow at 7.8%. Okay, so I think that's a very good, and of course this is mainly driven by the services. We saw S&P upgrading India's rating in the month of August. Fitch reaffirmed, despite 25% additional tariff, that India's rating is BBB minus, that is stable outlook. No change in the India's rating. So that's another good thing which has happened. India's crude oil basket, which is a very critical, and I think that's been a little bone of contention between India and the US, that why are we importing Russian crude oil. Indian basket price moved slightly from previous month, which is good for the country like India because we import crude oil. Geopolitically, there has been a realignment. The relationship between, and in fact, last Friday when I was making a presentation, some of you people suggested that since India attacked the nuclear facility in Pakistan, and which was which shown the US in a very poor light, that's why Trump is acting against India. But now the news seems to be coming up that Trump wanted Modi to nominate him for the Nobel Peace Prize, and it seems Modi said no. This is based all on news. There is no confirmation has come either from US or from India, but these are the sources which are suggesting. Now, because of this very, very wrong, uncalled for statement coming not only from Mr. Trump, from other US politicians or bureaucrats, India had no other choice but to realign its relationship with China and Russia. Now that's again it's a very good move if you ask me in terms of geopolitically, because if you don't, sometimes attack is the best defense, and I think somewhere India chose to be a very passive attack to defend its rights and its interest. I think the message is going loud and clear in the US. If you bully us, we will not allow that to happen. India, the result season got over in the month of August for the June quarter, and the numbers are decent. Almost double-digit kind of a net profit growth that India Inc. reported, and even today, I think I have been saying for quite a couple of this that Indian growth earnings should be very, very good. And today, Ramdev Agarwalji also made a statement that we are heading towards a better Indian earnings growth going forward. US, while China, despite one of the largest importer of crude oil and other various commodities which I presented on my Friday webinar, US decided to increase the additional tariff till 9th November. So China will continue to pay only 30% versus previously 140%. We don't know whether 140% is practical at all or not, but it clearly shows a very, what we call, not so very fair deal between what has been accused of India and what China has been doing. If India is importing crude oil, much larger quantities imported by China. Why they have not been put any additional penalty? But on the other hand, that tariff clause has been exited until 9th November. In the US, PCA price index moved up in the month of July. Core also moved up. There is a high probability that inflation in the US will go up purely because of tariff war. But despite that, there is a hint from the Powell that in September FOMC meeting, we can expect 25 bips rate hike. In case if that rate cut, in case if that happened, that could be the last rate cut of 2025 from the Jerome Powell. And I'll come to that little later. What is expected by the US economists? We all know that Mr. Putin and Trump, they both met in Alaska to find solution to the Ukraine-Russia war. And it was inconclusive. In fact, a lot of hope was there and did not happen in the month of August. And one more thing which happened in the very fag end of August, if you remember, and I discussed about that, I don't know how many people remember that, but we discussed that the authority of Trump to put tariff, is it allowed or not? In one court, district court, Trump lost it. It went into appeal court, and in one appeal court, the ruling is that Trump does not have power to impose tariff, citing an emergency. Because had it been emergency, this emergency, therefore very many years of trade deficit. And as I had mentioned last time also, the aggrieved party will go to the Supreme Court, and the time is available till 14th October. That means despite Trump losing in the appeal court, that India's tariff will continue. And of course, Trump is not going to take it as it is. He is going to challenge this in the Supreme Court, and he has a time till 14th October. Of course, much before that will happen, and this will get challenged. And again, Supreme Court will look at the merit and the demerit and will decide. But right now, tariff remains as it is. Moving from India to US to international, OPEC Plus decided to increase the output by 5.47 lakhs barrel a day. Bank of India did 25 bips rate cut. This is the lowest in 2 years now, the rate. But Bank of Japan and Australia decided to maintain status quo like India. So as we have been kept saying for quite some time, central banks across the world are taking a very divergent view or divergent action as far as rate of interest is concerned. Very quickly, we'll go through some of the data points in the month of August. Advanced decline ratio, is 0.8. In other words, 2 months in a row, we have seen poor market sentiment. Now you may think, last time the data was different and this time the data is different, your observation is right. All this time we were taking data of advance decline ratio of BSE. This time we are taking it from NSE, and because of this NSE, it is 0.8. If you go back to my last time presentation, the data are different. So now we have shifted, and going forward, we will show more of an NSE. The reason why we are taking NSE, for the very simple, we believe NSE data gives more accurate picture of what happened in the market. Why? Because BSE has so many smaller size companies, whether they move up or move down doesn't make much of a difference there. NSE is a little smaller list of companies, but almost equivalent to what kind of market cap BSE enjoys, and hence we thought we will take it. So henceforth, we will show NSE advanced decline ratio, and you can see in last 12 months, there are more red, that is less than 1 advanced decline ratio as compared to green, which clearly shows that sentiment in the market has been quite poor in last 1 year. I must also tell you, please see your own personal portfolio in last 1 year. I can tell you with a lot of confidence it must be struggling. And of course, a lot of fund managers are also struggling, no doubt about it. India lost 22 lakh crore market cap in last 1 year. Despite so many IPOs coming in, India's market cap, what it was there in the month of August 2024 and what it is now in 2025, we lost 22 lakh crore market cap. In other words, the decline is much severe. Have I adjusted for the IPO? But I have not done that. So this is what the status that gives. And the reason I was saying probably is very high that portfolio last 1 year would be not so great is because of this, the poor market sentiment. Advanced decline ratio more red than the green in last 1 year, and that's something also reflecting in the market cap. Second month in a row, our market cap has declined. India's market cap has declined. Cash volume, as I was explaining, second month in a row is less than 1 lakh crore, and we are at 6 month low. Why? Because the Feb was the lowest, the budget month, where the volume declined to 91,661 crore. But since then, it was going up, and June and July and August, we are seeing less than 1 lakh crore. So दिखता है वो काउंटर पे आपको कि कितना डिफिकल्ट हो रहा है आदमी को लेना या बेचना, एंड स्पेशली इन स्मॉल एंड मिड कैप काउंटर्स. Auto and consumption basket did extremely well purely because of GST cut announcement. So if you look at it, the Nifty auto was up by 5.52%. You remember, this is the same what we call index which was struggling. Why it was struggling? Because there wasn't fear of rare earth magnets not available, and that could disrupt the supply of the auto, the production of the auto. And if you remember, Rajiv Bajaj said that he will not be able to produce zero, and he did able to manage to produce. So that's a kind of a shift that took place. So it's not only because of GST, but also because of China started resuming the supply of rare earth. Number one. Number two, now since India and China relationships are improving, we don't expect too much challenge on the rare earth minerals, magnets coming in, and which is another positive thing for the automobile company. So 5.52% in 1 month. Nifty consumption is up by 2.73, MNC is 2.04, FMCG 0.49. Rest of the indices in the month of August are in red. Realty is down by 4.56. Today the data coming in that the stamp duty collection in city of Bombay is lower than what it was the same period last year. And I think NRO also came out with the statement that first 6 months of this financial year, calendar year, the real estate sales are little low. Bank Nifty was down by 4.12 and Nifty Finance was down by 4.06. This is one of the best performing sector, but they lost about 4% each in the month of August, purely because of fear that if tariff coming in, a lot of textile company, a lot of gems and jewelry company would have taken a banking loan, and because of tariff, the working capital will go up, or their assets can turn into an NPA, and that really impacted the performance of Bank Nifty and Nifty Finance. Within Nifty 50, if you look at it, Hero MotoCorp went up by 20%, Maruti Suzuki up by 17%. You don't see this kind of a numbers in 1 month purely because of GST consumption, and the prices of the input cost are very, very benign. That's basically helping it. Eicher Motor was up by 12%. Titan, another consumption-led story. Not much to really expect from Titan. Why? Because there is no change in the GST for gold and silver. On the contrary, the gold price is going up, which is actually may not be very positive for a company like Titan, but yet it moved up. So if you look at it, the auto did definitely was the outlier. Why? Hero MotoCorp, Maruti Suzuki, Eicher, Bajaj Auto, out of top 10, 4 companies are in the from the auto companies. Hindustan Unilever purely because of FMCG gain that coming in, and if you look at it, you see more BFSI segment. Shriram Finance, HDFC Bank, IndusInd Bank, ICICI Bank, Geo Financial. These are the companies that really come under pressure in the month of August. FII, second month in a row, net sellers in the month of July, they sold near about 18,000 crore. In the month of August, they sold 35,000 crore. More than double in the month of August as compared to July. On the other end, the DII almost pumping in 94,000 crore. So when you look at YTD, the FII have sold near about 1.3 lakh crore, against which DII have put in 5.14 lakh crore. And yet, we don't see market going anywhere in 2025. So DII pumping in has not been as effective as what FII selling has been. Someone asked me on Friday, if you expect US market to go down, how can you expect FPI data to be positive? And I said that I'll try to accommodate this slide in my Monday presentation. So I put this slide in my presentation. Now that observation, whoever asked that question, the observation is right. Why? Because we can clearly see a trend here. So, for example, Nasdaq 100 was down by 1% in the 2018. S&P 500 was down by 6.2%, and the market FPI inflow was negative for India. Something similar happened in 2022, where Nasdaq was down by 33%, S&P 500 was down by 90%. We can't remember that market gained by 33%. Am I right? अपने को याद नहीं होगा कि Nasdaq गया था. And in 2021, FPI outflow was 1.21. So, in a way, when the US market is down, FPI is normally a seller in the Indian equity market. Now, but then I'm contradicting, because what I was saying, I've predicted, I expect US market to go down. And yet, I expect positive FPI inflow. So, historically, that has not been the true. I again repeat, historically, that's not been 2020, 2015. There was like the S&P 500 was down by 0.07%, but we had seen positive inflow of 17,000 crore. So if it has not happened in the history, does not mean it cannot happen in future. I again repeat, I expect US market to be going in a downward trajectory, and yet I expect positive inflow coming in from the FPI. Let's move to the month-wise performance of large cap, mid cap, and the small cap. YTD, the large caps are in green, 3.3%, as you can see, Nifty 50, but mid cap is down by 4% and small cap down by 7%. So in like 4 months from April to June, it looks like that the small cap is making a comeback, mid cap is making a comeback, but last 2 months has been little poor for mid and small cap, and due to that, they continue to remain in the red zone. Rupee did go down, but the impact of that additional 25% tariff is not so severe. Why? Because Rupee depreciated by only 0.74% in the month of August, which is lower than what it was there in the month of July, and it is in fact in the month of April where the first time it was marked, the rupee basically represented 1.02%. Overall, we are down by 3%, which is normally the case in any calendar year. So is rupee depreciating too fast? Answer is no. Yes, but it is making a headline. Why? Because it's touching all-time low. So it is not the quantum of loss. It is the new low itself is making a big headline, and that's creating more about. But when you look at the data in a detail, Indian rupee has gone down by only 3% in 2025, which is in line with the historical trend without tariff or with tariff, So tariff as such is playing a very critical role in this terms of, to some extent, yes, but not so significant. 4 months in a row, the US market did better than the Indian market. Why? In the month of August, Dow Jones is up, S&P is up, Nasdaq is up, but Nifty, Sensex, and BSE find it all are in red. Surprisingly, China is up. China's SSE composite was up by 8%, even outperforming the US. And one reason could be the deferment of tariff till November by the US. GST collection, which came out today, we all know what happened there. The 1.86 lakh crore, which is a growth of 6.5% Y-on-Y, but when you look at it month on month, it is a decline from 1.96 to 1.86 lakh crore. But Y-on-Y it's a 6.5. Is the 6.5% growth is good enough? Answer is no. The first quarter GDP growth, nominal GDP growth has been 8.8%. So logically, my gross, the GST collection should be equal to the nominal GDP, which has not been the case. So will I take this number at the very positive? Answer is no. Sorry. I will not take this number very positive. Why? Because there is a decline of 1.96 to 1.86, number one. Second thing, the growth is only 6.5%, which is less than the nominal GDP growth of this. Crude oil price, it was on the upside from 64 to 670 to 71. In the month of August, it came down to 69.1. So I think that's a good thing which has happened. Almost $2 per barrel has come down. And as we keep moving, I think it will further come down in the month of September. Why it will come down? Because the prices of crude are trading little soft. And the OPEC Plus announcing a production hike should further ease pressure on the crude oil price. Electricity generation, very quickly, 160 billion units in the August 2024, it came down to 158 billion units this one. So it's down 1% Y-on-Y. Today, the first day of the September has been good, started on a very positive note. But if you look at it, last 2 years, that is September 2023 and September 2024, the market has moved up in the month of September. So I think that's a good thing for this. So most probably we should expect better September even this year. So that will be third year in a row. We should expect good numbers. But of course, before 2019, September was not very great month for the Indian equity market. Monsoon has been good, 6% overall, and because of good monsoon, near about Kharif crop coverage has been 3.4% better than what it was there last year same time. So what to expect going forward? I think one thing which is going to be very, very crucial is the GST Council meeting, which is going to take place on 3rd and 4th September. A lot of hopes are there. Why a lot of hopes are there? Because it is expected that this will spur consumption boom in the economy to counter the 50% tariff imposed by the US. And hence, and of course, one will definitely look at it, how states which have been compensated for loss in revenue, which will be very. So I think 3rd and 4th September, we should expect some positive news coming in from this, because it looks like it's almost certain that we will see GST rate reduction, 12% bucket going into 5% bucket, and some of the 28% will move to the 18% bucket. Not everything has to move to the 18%, except some will go to the 40% bucket, which is a sin or luxury tax. FOMC meeting is going to take place on 17 September. Right now, the consensus seems to be 25 bips rate cut. What market is budgeting in the US or the economists are budgeting is the 3 rate cuts or 2 to 3 rate cuts, which is 50 to 75 bips rate cut. My personal opinion, I expect inflation to go up in the US. And if that is so, most probably 17 September data, the rate cut would be the final for 2025. But right now, there are expectations that 2 or 3 rate cuts can happen from the federal. We need to wait and watch. I think despite 50 bips rate cut in force right now, there is a hope. Hope in the form that US will eventually reduce the rate back to 25%. Now, if that can happen, that happens. As and when that happens, whether that happens in the month of September or in the month of October, in the month of November, I think that will be a big booster for the market sentiment. वो स्प्रिंग की तरह मार्केट बहुत दबा हुआ है, जिस दिन वो प्रेशर निकलेगा बहुत जोर से उछलने वाला है. And that's exactly what is going to happen. Today is the date where Russia and the Ukraine is supposed to announce the ceasefire, and Russia has to agree. We don't know what has happened now. It's still now there are no news that there will be a ceasefire. And hence that would be again what kind of action being taken by Trump, European Union. There was a news that Trump also wants other European Union to put sanction on India. We don't know whether that's going to happen, not happen. So we have to watch this very clearly. The monsoon this time has been good, and northwest has been extremely, we have seen situation like flood in Jammu, in Uttarakhand, in Punjab, and so on and so forth. Don't expect any relief in the month of September. Why? Because IMD had predicted that even September we will see above average monsoon. Now, a couple of things happens when the monsoon is beyond the capacity, this one. It disrupts the economic activity. I'll tell you, our office in Bombay, Monday, Tuesday and Wednesday, that is last week, we had a very thin attendance. Only 6-7 people were there. So, I'm just giving you this, is a city like Bombay, if this can happen, so you can understand how much it disrupt the higher end, disrupt the economic activity. So that will have some impact on the economy. And also, it can impact the crop, the sowing that we have been done, it can damage the crop also. So we need to wait and watch. Right now, the data is still not out in the public domain, but do expect some amount of an impact because of heavy monsoon on the economy number. Even the GDP can have some impact because of this. It is a very hot topic now. The FPI selling has been relentless and it has become a talk of the town. And it has become a concern for the market. So trend reversal will bring in a huge relief in terms of market sentiment. So that's what we expect. ICRA, again, September numbers will start coming in the first week of October. So ICRA has come out with the prediction or estimates that Q2 net profit growth would be somewhere about 5 to 6%, excluding BFSI segment. We had grown, excluding BFSI, we would be what, 12% or something. So they expect a little lower growth in the Q2 as compared to what has happened in Q1. But Y on Y 5 to 6%. But each and every commentary is saying that the second half of India would be much better than the first half. One good thing which will happen for the economy, that CRR cut, which was already announced by the RBI, will kick in the month of September, and which will happen, keep rolling out in a phased manner till December, which is likely to boost the urban consumption. So that's one of the reasons why consumption as a theme did extremely good. I have been saying from last couple of days that risk reward is in favor of reward now. In other words, please go ahead and keep increased allocation to the equity. You never know, must have bought or you must be buying equity at the lowest level. I don't expect market to go further down from this, and hence reward is very bountiful. So please do that. With this, let's open the floor for question answer. But before I this, I must congratulate Basir. These are a beautiful design of a Ganesha theme. So thanks a lot, Basir. Doing a good job. Good job. Yes, let's open the floor. Which are the Trump-proof stocks, Trump-sensitive stocks? Which are the ones which recommended for the medium to long term? Amit sir is asking. So Trump-proof stocks are only those stocks which are domestic theme. FMCG है, consumer durable है, banking and BFSI है, cement है, infra है, auto है. These are all the pharma to some extent, no, because we do exports actually, am I right? But these are the companies, auto hai jo bataya. These are all the sectors which are Trump proof. What are Trump sensitive? IT is Trump sensitive, pharma is Trump sensitive, gems and jewelry is Trump sensitive, textile is Trump sensitive, leather goods and services are Trump sensitive. So these are the Trump sensitive, and maybe to some extent refineries. Why? Because if new sanction comes in, your crude oil price can go up. That could unpack. So these are Trump-sensitive sectors. So in our PMS, we are focusing more domestic theme, and that's what we are playing right now to reduce the pain of a Trump tariff. Suhas sir saying nowadays situation of mutual fund debt scheme is not that great. Therefore, many investors are preferring large cap equity schemes in place of debt schemes, and it is becoming new normal to invest in large cap equity schemes instead of debt if the period is 1 year plus. Your view, please. So, Suhas sir, one should never decide which assets class to choose based on last 1 year, 2 year, 3 year returns, because kya hoga? That's called recency bias. You can afford to take risk. It's a long-term equity, which should always be the case. Debt should always be, and I kept saying that debt scheme only to the extent of meeting your contingency funds. 3 years or 5 years, depending upon your risk profile, you should put that money. So the choice between debt and equity should never be the function of how much historical returns has been given. It should be a function of whether it's emergency funds put in debt, if it is not put in the equity. And since we are talking about mutual fund typically is a long-term product. So then why invest in large cap? I would still put in a flexi cap kind of a stuff, which is more because then the fund manager will have a choice in terms of market cap allocation. And India always has been the stock picker market, in the sense small cap will do better than as compared to mid cap, and mid cap will do better than large cap. If that is so, then why large cap too much exposure? But your risk appetite is a little low, then definitely go for large cap. I don't invest in a mutual fund active schemes, as you all know, because I personally believe that I can do better job as compared to any fund manager in this country in terms of creating alpha. So if that is so, why should I do that? So that's the reason I do that. But if you are a conservative investor, go into large cap. But my advice would be, if that's not the case, and your time horizon is 5 years, please go for the flexi cap. Sagar, there are 2 questions. The latest GDP numbers came very excellent. Do you feel now that due to tariff issue, the GDP number going forward will be sort of a soft, or latest reform GST cut can compensate? And if it compensates, where it will be visible in earning, and when a market can react? So market doesn't wait for the numbers to come. It will always react in advance. So the GST numbers is not going to kick in the second quarter GDP. Why? Because 3rd या 5th September को है. Assume before Navratri the new GST rates come in. Hardly any time to impact the second GDP number. So I don't think the second GDP quarter number can be soft. Let's be very practical about it. It will be further soft because of, as I was talking about, lot of disruption because of the heavy monsoon. The economic activity has been taken a beating. That will reflect, and if you look at the data, which is GST data, less than 7% Y-on-Y growth does reflect that. So don't expect GST compensating for this. So do expect Q2 quarter GDP numbers to be a little soft. But market will start discounting the future. So don't expect, it's already there in the price, the soft GST GDP numbers. Also, by allowing China to enter in Indian market, domestic company may face competition, earning can come down. Your advice on it? So Sagar ji, I think India will open up those sectors where India does not have to suffer, whether import of rare magnetic earth, rare earth magnetic, some other products which India does not have a huge capacity or something, or for example, compressor in the AC kind of a stuff. That will be allowed basically, or some of the critical API for the pharmaceutical. That would be allowed. But will that Chinese goods being dumped into India and creating a pressure? I don't think that's going to happen. That's not good. Because I think the hypothesis on which India and China relations are going to build is that we have a mutual respect and mutual well-being taken care. So I don't think that's going to happen. So your fear of Chinese goods being dumped into India and creating a problem for the domestic producers, the answer is no. And I think somewhere, my suggestion to all of you, Sagar sir, not only to even everyone, do not buy product which is made in China. While what government can do will do, we as a citizen of this country need to also ensure थोड़ा भले महंगा देना पड़े, but buy India produce. And I think that's the way we should look at it. Somewhere, sometimes we have become so selfish in our this one, कि जो सस्ता है उसको ले लेते हैं without thinking about what consequences it can have on the national GDP, on the nation's GDP number. Focus on domestic. ना थोड़ा बोलो महंगा पड़े, भले महंगा पड़े, क्या तकलीफ है? Why can't we do that kind of a sacrifice for the national interest and do that? Vikram sir, on one hand you suggested stock of the week so and so, and call mentioned sale on Dr. monthly target for more than 5%. What is the rationale for too much of reliance on software to make decision? Trading call, sir, has a different logic altogether, sir. See, trading call is a different IP stock, and my request to Vikram sir, don't talk about companies, because see, stock of the week is a paid product. This forum is for everyone to come and this one. So please don't put in future, please put this kind of a question, because it creates a problem. But having said that, both the IPs are different, and hence both has a different logic altogether. Trading calls are technical calls, stock of the week are fundamental call, and it can vary. सुहास सर, अगेन आई थिंक आपके बहुत फेवरेट लगते हैं. वसील जी, GST collection August reached 1.86 level of 6.5, but with the current indication of cut in GST will not be sustained in future. Does this affect revenue government? Any impact on government capex? Suhas. So sir, your logic is very right. There is nothing wrong with your logic. If the GST revenue cuts down, will it come at the cost of the capex? I don't think government is going to reduce the capex. I think one thing that government can do is to allow fiscal deficit to go up. Why? Because the situation demands that. So the glide path that the budget has given, so I can, right now my understanding and my reading is this from the government, this is that they need to do heavy lifting, and they will do the heavy lifting, and heavy lifting by doing more public capex. So I don't think they are going to cut on the capex. They will, and in the process, let there be a high fiscal deficit, so be it. But they will not do the capex, because they need, and And the one good thing that what we are talking about, the cut in the GST rate will reduce the GST. I think the one assumption is that if you do it, if you reduce the GST, more consumption will happen, and then in a way will compensate for this. Of course, these are all the assumptions we need to wait and watch. And I think in what form the new GST, revised GST comes in, how much impact it could have, so and so forth, we need to wait and watch. But your observation is very logical, but whether that logic really plays out in the real life, we need to wait and watch. And of course, market will look at these numbers and what the government has to say on the government capex. For some reason, if government say that capex will get curtailed, I don't think market is going to like it. So while the GST may be positive, if capex budget goes down, I don't think market will be very happy with that. Mayur Bhai, is good evening. Is GST 2 will increase local demand and square of export loss against tariff hike? To some extent, yes, but not the 100%, sir. See, try to understand, US has been a big market for us. I know some experts say that export to GDP of US is very minimal and we should not. But sir, we forget that 18 to 20% of total exports is accounted by US. Of course, that do include some exempted item, but it's not a small number that we are talking about. Even if you remove the 50% of that, which still works out to be about 10% of the total export, which is a substantial number. So my sense is that will it immediately square up by local demand? Answer is no. The answer is no. It will give some shock absorber, but complete jerk नहीं लगेगा, वो तो difficult है. लगेगा तो सही सर. Vatsalya sir is saying, whatever we say, going against America will not be in our interest as China can never be relied upon. Our GDP data and company results do not match. What are your observations? So, first thing, do you ask two pertinent questions? Let me first try to answer Vatsalya ji first part and then the second part. So, sometimes, you can't take bullying at the face value. So, the moment you get warm up, the guy who's trying to hit you very hard will need to rethink. Should I keep hitting you hard or should I soften my blow? And I think that's what the India is doing, tactical thing. Even China understands that very well. So I agree with you that, going too much against America is not in our favor also. But when you force someone to do that, we will do that, and we have to counterbalance this, and that's what I think is a tactical game, which the Indian government has been playing with that. So China can never be relied upon. I agree with you, because in the past history suggests that the more we trust China, the more pain it has created for us. So I fully agree with you that statement. Now coming back to our GDP data and the company results do not match. I don't think so, sir. See, remember, GDP also, as GDP is basically encompasses the complete economy, which include non-listed companies also. While the result that we see is only of a listed company. In other words, you would see some amount of what we call disconnect. But otherwise, I don't think there is some major disconnect between GDP data and company results. Unless you have some valid point, please put that and justify with the data point, and I'll be more than happy to answer that, Vatsalya ji. Indravardhan said, as you said, tariff will remain same till 14th October. What percentage, please? So, sir, okay. What I said is not 14th October tariff will remain as it is. What I said that the appeal court has passed a judgment and allowed the aggrieved party to go to the Supreme Court till 14th October. So this tariff will, so even if you go in the Supreme Court, then tariff can remain 50% only even beyond 14th October also. So don't get confused with Devadhanji. The tariff as we speak is 50% and it will remain till Supreme Court decide that this is illegal, then it has to go back. But what I'm saying, it's not a legal, out-of-hand legal stand. I think somewhere what I'm saying is that the Trump administration will realize it's unfair on our part to charge 50% tariff on India, and hence they will withdraw before. See, right now it's not 25-50. The court, the appeal court has ruled that the Trump does not have authority to bring any tariff on any country, forget about India. So the matter is not pertaining to India. The matter pertains to the tariff which applies to almost each and every country or each and every region in this world from the US. So these are two different things. So tariff will go, if there is no solution, there is no relief, tariff can remain even beyond 14th October also, and it's 50%. I hope I've made it clear, Indravadanji. Muthu sir, what is the outlook on gold and silver? Can we buy gold and silver ETF at this point? If yes, how much should be the allocation? So Muthu sir, I am not advising that, to be very honest. I personally believe that by virtue of gold price appreciation, the gold allocation has gone to about, in many cases, 15 से 20% हो गया है. So we advise 10 to 15% allocation to the gold by virtue of equity not going anywhere and the gold appreciating. वो एलोकेशन बढ़ गया है. I would request you to trim from gold and reinvest to equity. I don't expect too much upside for the gold. Silver can further have a legs. It can go up. But gold, I don't. Today, of course, the gold has done extremely well today. Equity did well, but even gold did well. But I don't see too much leg. So risk reward from here in gold is not too great. I would not be very comfortable increasing. Silver, you can do that. But overall, your allocation should be 10 to 15% of your total, what we call wealth, gold and silver combined. Can we? Is there an RBI repo rate cut going to happen soon? If yes, when will it happen? I don't expect that to happen in the next monetary policy, unless something drastically happens with the growth in the economy. There is no reason for RBI to do rate cut at this point of time. So my base case scenario is zero. I don't expect, if you remember, I was expecting a rate cut in December, Muthu sir. Now even I don't expect in the month of December also. But let's, of course, this is all dynamic situation because RBI also needs to ensure that inflation is one part, but we need to also ensure that economy does not suffer. So if for some reason economy slow down, inflation remain benign, we can expect another rate cut. Let's wait and watch. Right now, I don't expect immediately in the month of October. RB sir, Indian equity market have been underperforming as its Indian peers with YTD 2025. Basic premise being that India is not doing as per expectation. Now with the streamlining of the GST slab rate and rationalization of income tax, are the equities at the cusp of a turnaround, or do you still foresee more pain and more needs to be done in terms of fiscal policy by the government? So more needs to be done by the government, that will happen. But are we in the cusp of a turnaround? The answer is yes. I again repeat, Indian equity market in next 12 months will give returns in double digits. And you are right, RB sir, that we are one of the worst performing market in 2025. Why? Against Asian peers. Globally also we are one of the worst performing market. Last 12 महीनों में पैसा नहीं बना. Next 12 महीनों में पैसा बनेगा. And that's the reason when someone asked me, should I increase allocation to gold and silver? I said, don't do that. Increase allocation to the equity. Kinsen, sir, will the 40% slab rate be negative to luxury cars, auto sector, player like Titan and in luxury, and chances of USD 95, your insight please. So let me first, 95 ruled out. I don't see a probability of 95 happening in 2025. The probability is 0.00001%. It can happen, there's nothing called certainty in life, but probability is very, very low. Now, will it impact negative? It can impact luxury cars, not in a listed space right now we have, except Tata Motors And players like Titan, no. I think, see, try to understand. Gold and silver is a different GST rate. They will not be having 40% slab rate. So no, answer is no. Namami, prospects of gold and silver. So I think I made an answer very loud and clear. I don't expect gold and silver price to move up from here. At least gold price not to move up further from here. Silver, yes, it can go up by further. And if you go back to my mid-year review of my prediction, I did mention that gold may not have a legs, but silver do have. And I revised my target upwards for silver. So gold से थोड़ा दूर रहिए. If required, you can trim down, and that trim down money can go into Indian equity market. So in the interest of the time, we will take last 5 questions. Okay, Basir? Yeah. Vikram sir, if Elephant and Dragon are going to Tango, which are the stocks which will be in the news and good to invest? So focus on domestic focus. Again, I said BFSI, capital goods infra, cement, consumption. I think these are the goods that should do very well. PK said, the political situation which is evolving is a dampener to the economy, your commitment. I think you want my comment, am I right? The policy situation is always evolving, sir. And politics always impact economy, sir. Which has happened in the past, it has happened in the future. But beyond a point, politics, in the short run, politics do have an impact on economy. In the long run, it has none, actually. But anyways, having said that, I think it's all counts in leadership. We have seen some of the great economy by poor leadership going down the drain. Something similar is going to happen with US now. Okay, and at the same time, some of the poor economy emerging very strongly because of strong leadership. And the classical example, not to go very far, Singapore. The great leadership completely transformed the economy. UAE, and within that, look at the Dubai and the Abu Dhabi. So it's all leadership that counts actually, and that's what basically decide. So I think it's a leadership at the helm. 2 countries got independence at the same time, India and Pakistan. Look at where is Pakistan, where is India. It's all a question of leadership. So these are many examples I can give you which basically that's decide. So yes, political leaders do have an impact on the economy. Rinku sir is saying FIIs index future long to short basis around 10% on long side and 90% on the short side. During time it was the same, sir. Now your advice on it. So sir, I'm not a very big expert on the long short of the future, but assume what you are saying is right. Then I'm only drawing a conclusion. During COVID time it was the same. We all know what happened, and then post that. The market moved up very substantially, isn't it? So if are you saying that since it was very similar to COVID time, the ratio, during post in the month of March, the market start going up after crashing. April, May, June, we saw market doing well. So if that's what you are saying, the market should do well. Namdhari sir, there are sectors which can be considered as the contra ideas now. Example, those will got better due to US tariff as a due course of time tariff will get reversed or normalized. See, that's one story that you can play, but does have a risk. So I do expect a tariff not to continue for a long. But if that is so, maybe you can look at textile as a one theme which will bounce back very strongly, which is a contra call that you can look at it. Some of this gems and jewelry you can look at it. Some of the leather company that you can look at it. Some of the shrimp company that you can look at it. But you need to have patience that can go further down. So if you are mentally prepared, then go ahead and buy this contra call. It's not a wrong strategy if you ask me. If you are a high risk taker, you can bet on these sectors also. See, everyone has a different risk appetite. So you need to decide which risk appetite you have. Gerard sir is saying, don't you foresee collateral impact on the economy overall and even the domestic consumption industry due to the unemployment and disruption triggered by the US tariff? So, you are right. Now we need to look at it. on one hand, people are asking employees to go, which logically will have an impact on the consumption. On the other hand, because of prices lower, the more consumption will happen in the economy. The set of people who are going to get unemployed, and the impact of GST reduction on the consumption is far outweigh the people, those who are losing job. And remember, there are certain items which are demand inelastic. In the sense, आपके पास आप सब कुछ छोड़ दो, लेकिन वो चीज़ तो चाहिए, जैसे FMCG फॉर एग्जांपल, जो आपको चाहिए. अगर आपके पास जॉब नहीं तो आप क्या टूथपेस्ट करना बंद नहीं कर दोगे, आप नहाना बंद नहीं कर दोगे, आप शैम्पू यूज़ करना शायद बंद नहीं कर दोगे. Am I right? There are certain items which will still, demand will still be there. You may do down trading, but you will still consume that product. And because of reduction in the price, there could be more demand for that goods. That could happen. So मुझे लगता है जो unemployment एरिया से जो disruption होगा, it will be there, but the impact would be little low, and the GST का benefit जो होगा which will be much higher. So net वो positive होना चाहिए. That's what my limited understanding, sir. Last two questions. Samad sir, good evening. Sunil ji, how much return can we expect from here in next 3 years in equity, and what are the sectors which is going to outperform next 1 to 2 years? Kindly enlighten us. तो सर enlighten तो मैं नहीं कर पाऊंगा, लेकिन थोड़ा मैं ट्राई करता हूँ जवाब देने के लिए. You should expect 14 to 15% CAGR from Nifty 500 in next 3 years. CAGR. So कभी खसी होगी, कभी गम होगा, पर ऑन एन एवरेज 3 साल में, जैसे सितंबर 2025 से 1 September 2028, you should expect 14 to 15% CAGR from the present level in Nifty 500. Which are the sectors? You know, every year I keep coming with my sectors favorite. So I did for 2025. I'll again come in January 2026 and I'll tell you which sectors will do well. See, remember, things are very dynamic, and hence to taking a 2 years view at this point of time would be little out of the place. But next 1 year, I believe BFSI should do well, consumption as a theme should do well, cement as a theme should do well, infra as a theme should do well. Last question, please. Mayur sir, kindly advise your view regarding India IT sector and US IT sector, Nasdaq. So I'm not so bullish on Nasdaq. IT companies will not count the great numbers for the September, and that could be the right time to get into the IT companies. That's what my sense is. I know there will be more questions, but in the interest of the time, we need to conclude here. Please keep celebrating Ganpati festival in city like Bombay. It's at peak. You know that every day big VIPs are visiting Bombay just for Ganpati Darshan. If you are in Bombay, if you are in Maharashtra, please do not miss this opportunity to visit Ganpati Pandal, and you will have a great time enjoying that. Again, I'll be in front of you most probably next week. Till such time, good night, take care. For my PMS customer, I'll be there with you on Thursday.